My instinct is that secretaries of the Treasury would always like lower rates, especially at the long end of the curve, as they think about financing the U.S. deficit. And given the size of the fiscal imbalances that the United States has, and the possible pass-through in debt service into ongoing increases in the deficit going forward, I think the Treasury Secretary and probably the President would like lower long-term rates. But at the end of the day, that's going to depend on economic performance. It's going to depend on inflation. It's going to depend on the Fed. I don't think there's any button he can push to control rates in any meaningful or appreciable way.
So where then does this leave the fiscal balance? And we know about Treasury Secretary Bessent's 333 policy. Is that achievable, or is he going to run up against a brick wall if President Trump is committed to spending and what the market may perceive as fiscal recklessness?
My sense is that 333 is commendable, it's laudable, but it's also very aspirational. I don't see scenarios where the U.S. economy grows 3% a year over the next 3 or 4 years. Maybe I'll be surprised on the upside. But even more difficult, in my baseline U.S. fiscal deficits over the coming decade, assuming that we extend the Trump tax cuts, which is very likely, those deficits are likely to be running at 6 to 7% of GDP a year going forward. And in order to get the deficit down to 3%, you need to eliminate the entirety of discretionary non-defense spending, which is that's the majority of what people think of as government. It just doesn't seem plausible to get the fiscal down to 3%.